Okay, in this video, we're going to get into the difference between supply and demand and support and resistance. First, we're going to go back to the definitions of support and resistance so I can allow you to sort of walk through the logic of what I'm going to tell you. If we remember the support and resistance lesson, we had support as a level, acted as a floor. Price would bounce in that area and it would be hard for the price to break through that area, right? So we see here, this is over 2 years of data. This same area here acted as a floor. When it broke through, the same area acted as a ceiling, right? Resistance, 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 resistance. So, but what you'll notice though here is that this is a very wide area. Like if you look at these, look at price coming down here, coming down here, coming way down here. So this is a very wide area. Okay, very wide area. Let's take a step back real quick. Let's talk about resistance, right? So what's the root cause of resistance? Large participants, okay? Passive sellers, right? That are offering shares that absorb, okay? That absorbs the momentum, right? Or sellers who think that price is overvalued. So price comes up to this point, sellers come into the market, right? Or aggressive buyers taking profit. So momentum goes up to a certain point, then the aggressive buyers, they start to take profit, right? Then on the support side, it's the inverse, right? So passive buyers, so there's sell momentum, big passive buyers are here and it can absorb that sell momentum, right? Buyers who are looking to buy low, maybe price comes to a certain point, the buyers start coming into the market, right? Aggressive sellers taking profit as well. So these aggressive sellers may be taking profit, right? So resistance and support, right? Those are the definitions. Now, the difference between the two is that, yes, support, supply and demand zones are support and resistance by definition, but these zones are more specific and they communicate to us at a certain price level where the institutions are more likely to buy or sell. One example I can give you is that the lion and the kitten are from the same family, okay? They're both cats, but the lion is a more powerful cat, right? So the support and resistance, supply and demand zones are support and resistance zones, right? But they are more powerful because number one, when when price prints these zones and returns to them, right, in the short term, price is most likely going to bounce from these zones very quickly. Why? Because the institutions are there. We know that the institutions are there. The broader support and resistance, price can sit on those zones for a longer period of time. So price can bounce off these zones for a longer period of time and not really move, right? And these zones are normally more broad, okay? They're wider. The broader support and resistance are more wide. But when the demand or supply zone prints, I'm gonna show you. When this zone prints, it's easier to find where to buy or sell from, because these zones are a lot smaller. So here, what you're gonna learn in a few videos, this is what we call a demand zone. We call this the rally, base rally. You see how tight this zone is? This is it's under the umbrella of support and resistance, because when price comes back here, price is going to reject, right, and fly up. But this is more powerful for us because it hones in on where the institutions are more likely to buy or sell from. And it's a tighter zone, okay? So here you see the support zone is very wide here. Wicks flying all up here. But this little candle is here as our basing candle, which we'll learn about in a little bit. And then boom, price flies up and gives us this little basing candle, so smaller area that will identify where, when price comes back to it, the price is most likely going to fly up, okay, and reject. So watch. So price comes back here, so that that sell momentum was absorbed, and then boom, price, aggressive buying, aggressive buying, aggressive buying, aggressive buying. This is a clue that prints to let us know that an institution is there. So when price comes back here, they're coming back. Why? Because they most likely left limit orders there because they want to buy at a good price. So remember, the aggressive buyers have to push the market up. So once they push the market up, if they were to continue to buy, then they're going to buy at worse prices. Price comes back down here so they can buy at a better price, and then we'll see the price shoot up. Okay, so recap. Support and resistance are broader zones, broader areas. It's the umbrella, like the cat family, right? The cat family has lions, tigers, cheetahs, etc. But the lion is more powerful than the kitten, right? The lion is more powerful than just the cheetah. Okay. So even though this can act as a support, right? This came here and it acted as support. This zone is more powerful. Okay. It's more powerful. All right. And then, so just imagine if you saw the break of the support here. Let's say we're going to take the demand zone away. You saw the break of the support here. Okay. Even if we made it tighter to fit this last point here, or if we were waiting on it to come back to this swing point that it broke through, we would miss the move. So people that are waiting on a break and a retest of this zone, they miss the move. Why? Because the demand zone is there. That's where the institutions are. So we need to know that the demand zone is there so we can get in on the move. So I hope this makes sense. These are powerful zones. This is going to change the way that you trade if you don't use supply and demand zones already. Leave your comments and questions in the section below. See you in the next video.